Hey there, Tamir from Fibonacci-Traders.com, your weekly market recap. What a week we had, what an October we had. October is already almost over, few more days, and then November, December, 2 more months for this 2023. We are in a bearish land. Like, subscribe, let's see what SPY and Friends brought us in the past week. Another 2.5% to the downside, and the SPY 409, 618 Fibonacci retracement, failing to hold above this, and we are heading towards the 396. As you can see, this red trend line that was a very important uptrend support for the higher lows since October of 2022. Basically, 1 year of an uptrend just got broken to the downside. So we are in a downtrend until proven otherwise. Do not try to be a hero. Do not try to catch a falling knife. You will get cut. There is a big difference between trying to catch a falling knife and trying to identify the bottom. And the bottom is still not here. QQQ, same thing, breaking below this channel. And once you break below a downtrend channel, we can expect a steep downtrend continuation towards the 337 and then 325 to the downside. Let's take once again Fibonacci trend lines. This is all we need. Lower highs on a yearly time frame. Now we can take Fibonacci once again, the trend line, sorry. And this is our next support. This area over here, 332, is our next support. We can take also Fibonacci, and look at this, where price is now, 344 is also a Fibonacci support. Below it, 332 together with this white trend line. Dow Jones on the weekly breaking below this trend line. This trend line is not relevant anymore. What do you see? Lower highs on a yearly time frame, lower highs on a weekly time frame, which means on all time frames, we are in a steep downtrend. On the Dow Jones, we can take Fibonacci, and Fibonacci will let us know, here we are. Where price is now? Fibonacci support. Breaking down and under, 315. We can take also Fibonacci from here. October 2022, 320, below 320. We are heading towards 311. 315, then 311. Overall, Dow Jones also not looking good. IWM, once again, here we are. 162, we have talked about this 162 in the past few weeks or so. Was a very important area of support, October 2022. June of 2022 was here a very tough resistance. So now, needs to hold the support. But it doesn't seems that bulls are nowhere to be found. Everybody's looking for the bulls. Nowhere to be found. Downtrend continuation, and we will see 154 and then 143 to the downside. Bitcoin on the weekly, bulls continuation, 2 weeks in a row. Another 13.6% for now. As I record this video, almost 2 days left for Bitcoin weekly candle to close. We have this uptrend line that holds the higher highs. There is a good resistance. This resistance shows us a higher highs. This red zone needs to hold the support. It was support over here. Resistance, resistance, resistance. Now broke to the upside. Will go all the way towards this white trend line, failing to hold, failing to break above this white trend line, and we will see retracement and retesting this red zone once again as support before the next leg up. Ethereum, relative weakness on Ethereum, as you can see. Ethereum is still inside this downtrend channel. Let's see if Ethereum can break and close the week above it. Otherwise, we will go retracement towards, once again, the lower red trend line. You can also take Fibonacci, swing low, swing high, and here you have it. 1830 from support, resistance, support and resistance. Look here how price hover up, above and below this 1830. Now once again resistance together with the trend line. Let's see where Ethereum will end up this week. But as you can see, everything is trend lines, Fibonacci and candlestick analysis. CL1 crude oil futures on the weekly, this red zone over here from resistance November 2022 until August. Last August, very tough resistance, broke to the upside, went all the way to this red zone that was a very difficult resistance. This red zone also was, in the past, a very important area of support. Support, resistance, now went all the way to this resistance, went back down and retesting this red zone as support. Let's see. For now, crude oil is bouncing between the lower red zone and the upper red zone. Let's make this green zone. Red zone, green zone, short below this red towards, no need to guess. We have Fibonacci. We can take Fibonacci. And here we are. Look at Fibonacci. Gives us everything that we need. Below 83.45, 80, and then 76, 70. Long continuation above 88 towards the 95 area. Above 95, and we will see a very strong bullish run towards 120. NG1, natural gas futures, uptrend, yellow uptrend until proven otherwise. And as you can see, trend lines shows us the way for future price action. And as long as NG1 price is inside this yellow trend line, the way is up. Some kind of a retracement, retesting this red zone once again as support. Extend it to the right. And here we have everything that we need to follow price. If you're not long yet on NG1 and natural gas, I think we need to wait for two things. One, maybe a break up and above, and then we can start taking long using this trend line as our support and our risk management, or wait for some kind of a retracement, retesting this red zone once again as support, and then next leg up. Gold futures, XAU USD. Look at this bounce, this bullish run in the past 3 weeks. As you can see now, we are heading towards the 2050, all this area of very tough resistance. You can also take Fibonacci, swing low, swing high. 2020 is the next resistance, above it 2080. SOXX from the orange uptrend channel, now inside this green downtrend channel, and SOXX is going south as long as the price is inside this green channel. Breaking above this green channel, where price might be heading next, retesting this trend line from support. This trend line will become resistance, and here you have your broadening formation. If you don't know what broadening formation is, if you want to get some free education, check the links in the description below. Fibonacci Traders Academy playlist. 25 videos on how to become a better trader each and every day. Each video no longer than 15 minutes. So check it out. Technical side, the psychology behind trading. Apple, downtrend until proven otherwise. This gap got filled. This gap at the 167 got filled Friday inside candle, which means we are waiting 6 more days for Apple's earnings. 168 needs to hold, otherwise 162, and we will continue sliding down on this inside this channel. Let's see how market will react for Apple's earnings. Good reaction. Apple will break above this red channel and it will pull all the market up together with it. Amazon 124 still holding, 134 resistance. And as you can see, if you remember last week's and previous week's weekly market recap, you know all these levels, and look at this, where price bounced from, the 50% retracement, then gap up after the earnings. 125 is holding. Now let's see continuation above 134, and then we can start go in long on Amazon towards the 146. Meta, this double top scenario on the weekly on Meta is still in play. It will get validated below the 279 area, and then we can take Fibonacci, of course, below 284 towards the 273, 262. Below 262, we will see 230 to the downside. Microsoft, if you remember previous week's weekly market recap, you know all these lines. You know this trend line, and once again, failing to close above this trend line. But we have all this area, the 323 area, look left. Draw a line, support, resistance. Now in the past 3 weeks, support breaking below this green line, where price might be heading next. No need to guess. We have the 311. Below 311, we have the 292. Google broke below this uptrend channel. Remove it. It's not relevant anymore. Where price might be heading next? This is, of course, because of the earnings gap to the downside. Look at Google on the daily. Nasty price action. On the good side, we have a gap over here at the 137. In my opinion, and it's only my opinion, if you check the daily, because we need to zoom in, zoom out to get a better point of view of price action. Google first needs to close this gap at the 117. And then maybe bulls will bounce back. We have a gap over here. Let's mark it with this one, so we know it's gaps. So we have 2 gaps to the upside, 2 major gaps to the downside, in my opinion. 113 gap needs to get filled, and then bulls will gain their power back, will gain some of the respect back, because basically in 3 days, Google gave back 3 months of gains from July to the peak of October. 3 months of gains just wiped out in 3 trading days. On the weekly, it looks like this. We had all this area, very tough resistance. Bulls got tired. Bears came in control, now at the 50%. Retracement breaking below 116, closing the gap at the 113, as we said. And only then we can assume that the bulls will come back. But as long as we see this downtrend, as long as we will continue breaking below Fibonacci levels to the downside, do not be a hero. Bears are here. Same thing for Tesla. Close the week with a doji, but this double top scenario is intact. We have this neckline. Some people call it the neckline. This neckline, very important area of support, was, look left, resistance, support, support. Now broke to the downside with a doji. Let's see if bulls can get back above it, back above the 222. But as long as we have this red trend line, we are in a downtrend. On Tesla, we can also take Fibonacci and look at here. Where price ended. 50% retracement. It's all about Fibonacci and trend lines on multi-time frames. Netflix, after last week's 12.7% to the upside, this week, Doji. Doji represents the highest probability of a trend reversal, indecision in the market. If the market cannot decide, we surely cannot decide. We need to wait and see where price of Netflix will head. For now, it seems 380 to the downside. Below 380, we will see 340. We need, if you are not long yet on Netflix, this is not the time to go long. Of course, it's only my opinion. Always do your own due diligence. Never follow blindly anyone on social media. And it doesn't matter how many subscribers, how many followers they have. You don't know their risk tolerance. You don't know their strategy. They don't know you. They don't know your risk tolerance. And they don't know your strategy. It's good to follow to get ideas. This is what I do also. This is why I have Twitter account, to follow others to get ideas. But in the end of the day, I do my own due diligence. I do my own analysis, and then I take decisions based on my risk tolerance. Netflix below this uptrend channel broke a few weeks back, tried to get back above, and as you can see, from support to resistance, doji of a trend line, trend reversal to the downside is coming, 380 is the next support. Nvidia, bulls are trying with all their power to hold above the 404 because they know below 404 we are heading south towards the 322. The same bullish price action we saw over here. With high probability below the 404, we will get the same price action, but as a bearish price action towards the 322, and I will not be surprised to the 280. Seems too far, seems not logical. Never say never in the stock market. Anything can happen. If Nvidia went up year to date 187% to the upside, here we had 25% in 1 week, week before 10%. So it went up 35%, 35. So it can go down. It's less than 35, of course. 31% to the downside. 2, 3, 4 weeks, maybe till the end of 2023. Another Tuesday on Nvidia. AMD inside, red channel to the downside. Trend lines gives us the way for future price action, the roadmap. This trend line shows us that the road and the way is up until it broke to the downside. Price tried a few weeks back, 2-3 weeks back, tried to get back above it, failed, and inside, back inside the road south. 4 more days for AMD. Shopify, 5 more days for earnings. 45, here we are. You are welcome to check previous weekly market recaps. We have talked about this 45 that will come, and here we are, 45. Below it, take Fibonacci. You don't need to guess. This is not a guessing game, and it's not gambling. Fibonacci, October, uptrend. And now, Fibonacci support, 45.86. Below it, you have Fibonacci, 40.30. In trading, we need to think less. The more we think, the more mistakes we will make. We need to know where price came from and with high probability where price might be heading next. No indicators can give you where price might be heading next. All of them gives you, all of this indicator shows you where price came. We know where price came. We can look left. We don't need any indicator, any other line, any other noise that will tell us that Shopify came from 70 and now 46. We can see it. Our problem in trading and our problem as risk managers, as traders, we want to know where Shopify might be heading next. We have a double multi-top scenario, broke below this neckline. This neckline was a very important area of support, resistance, support, broke below it. 40.31 will be next. 5 more days for Shopify earnings. November 2nd will be very interesting to see, and expect another very volatile week on SPY and Qs, IWM, and the rest of the market. The only thing we have full control of is our risk management. If you want to know how to become a better risk manager, a better trader, a profitable, consistent, profitable trader, check the links in the description below. Choose your path for financial freedom. Thank you very much for joining this video. Like, subscribe if you find it helpful. Hit the notification bell as we are going live each and every trading day, 8:30 a.m. Eastern Time. Until the next video, until the next live, stay safe.